Good evening. Welcome to Professor GSK's Social Laboratory presents panel discussion on personal finance matter. In this series of panel discussions and one-on-one interview on the series interaction with Professor GSK, today we are having a panel discussion on one of the very important, the aspect very much connected to each and every individual. So we have two panelists today, and they are very great personalities in that particular domain. They are doing a great job in terms of spreading the financial literacy in different parts of this country. So we are very happy to have eminent personalities, expertising in personal finance. So welcome to the panel discussion on personal finance matters. So the first panelist we are having is Professor Amok. From Professor Amok we are having today. Welcome to the show, Professor Amok.
Thank you.
Yeah, he is Professor Amok is a known person in spreading the financial literacy in different institutions, organization, and across the country. He made a lot of training programs. So more than 150 financial literacy training programs he has conducted, varied durations across Maharashtra, and he is the trainer for the capital market awareness program, and he has given lot of guest lectures conducted by topmost B schools of this country, and he is also associated with certain key roles with more than 20 educational institutions in Maharashtra, and he is also acted as a team advisor for the Nursery Monji College team for international competitions on finance, and he is also trustee and treasurer of T. Parchan Charitable Trust, which is aiming to enable individuals, groups, organization in problem solving. So we are very much fortunate to have Professor here for today's show. So once again, wholeheartedly, I welcome you to the show, sir.
Thank you.
So we have another young and dynamic panelist today is Mr. Vishwa. I am very happy and proud to say here Vishwa is my student, and he is now associated with Equita Small Finance Organization. I know him for the long years, some almost 7 8 years. He is an experienced strategy leader and mentor with a demonstrated history of heading strategic initiatives in new age technologies and customer centric products. So he is also an entrepreneur, and he always an entrepreneur in nature. He is always one guy trying to come up with something very much contemporary and something very much useful to the society. So I welcome Vishwa to the show.
Thank you, sir. Thank you. Thanks for having me.
Yeah. So let's go on. I would like to start from Professor Amokia. Professor, you have done a lot of financial literacy programs, and I hope you met a lot of people across different parts of the country, and also different levels of the people at the different levels of their life. Okay. So when it comes to personal finance, the source of personal finance is more about this income. Okay, so income is the source of the personal finance. So I would like to start from having some discussion about the income, understanding the income part of the individuals. Okay, so with the see, being an economist, we always discuss that resources is always limited, and we have unlimited wants. So that is what whenever we start teaching economics, so resources are unlimited, limited, wants are unlimited. So what is your view on managing the our wants and preferences with the limited resources, limited income?
Yeah. See, the basic part is that many of us go by a simple formula in life. As you rightly said, that our income is pretty limited, and on the other side, our expenses are increasing day by day. So we have various types of expenses, right from our family expenses, professional expenses, expenses towards marriage, education, and so on and so forth. So, particularly, what we need to do is, first of all, we need to have a formula in life that most of the times what people do is income minus expenses is equal to savings. So we have to go the other way around and we have to change this formula to suit our life and suit our finances, wherein income minus savings should be equal to your expenses. So first you should plan for your savings, and on the other side, then you should be knowing what kind of expenses you should incur. So that's the fundamental thing that I would like to start.
Yeah. Thank you, Vishwa. I would also like to listen from you on this. So, how do you see this? What is your view on this? And you are the one not belong to see. I can see the totally a different mindset in the current generation. Okay. So those under 35, under 30 generation is totally having a different mindset in terms of handling their income. Okay. So as you are one of the guy belongs to that generation, how do you see and what is your perception of managing your wishes and preferences with the limited income?
Exactly. So as you and Professor Amok already mentioned, the income part and the needs that we need to fulfill, and then expenses. These three things will always be there. As Professor said, the formula, which is actually everyone should follow, income minus saving, then you have whatever you have, then you can expend. So actually, that should be there. But as you said, I will align myself more to our millennial age. People, we are actually a spending generation. If I compare myself with our 10-year older generation, we are spending generation. So in that way, it makes a lot of sense of this income minus saving, then whatever you have, because of credit card, you have a credit. Then this whole expansion, your you can just create the shopping spree. So that is something that is we should have. So I just want to introduce one thing that I was reading for some time. Is asset allocation plan is something that everyone should have, whatever generation they belong, whatever income band they belong, and whatever age they belong. It should be an asset allocation plan should be there. Maybe in next few minutes we'll discuss more in detail. But yeah, exactly. Our generation is in contrast to our 10-year older generation. So we should follow the formula that Professor has mentioned. First save and then do the expenditure.
Yeah, as Professor Ramok, Vishwa is, at a point very much clearly pointed out that there is a mindset different, among the generations.
Absolutely.
So, the
Yes.
one thing I want to bring here to you and Vishwa, both of you insisting that we have to first deduct the savings out of income, and then only the rest of money only we should consider it as a money available for the expenses. See, if
True.
you ask me, professor like me, the more the expenses, the more the better livelihood. Okay. The more the expenses the government do, the more the economic growth. Okay.
True.
So without meeting your demands and your wants, okay. So I see little contradictory in putting the money first for the savings and for the next for the expenses. So if you are not increasing your expenses, your livelihood won't increase. For example, your livelihood, see, for many of the Indians, buying a home without loan, it's not at all possible. Buying a home without a loan, it's not at all possible. Many of the middle class and many of the Indians are fulfilled their dream of having a home only by going for a home loan. Okay. So I see this contradiction in allocating the money, a portion of money, first for the saving and next for the expenses. So what is your view now on this?
See, the first basic point, as I said, is that you'll have to plan for your finances. So when we say expenses, you need to plan for your expenses as well. So as we know that there are different types of expenses that would arise. So the primary expenses that we have are definitely for our primary needs, which is food, clothing, shelter. So as you rightly said, shelter, which is through a home loan particularly, that is already there. So we need to even see each of us that what kind of expenses are we doing and are they really justified? So we may be spending on food, we may be spending on clothes, we may be spending on mobiles, we may be spending on our other primary needs because I count mobile to be a part of the primary needs today because most of us, the basic utilization of a mobile, if you really see as per government reports or maybe reports from the mobile industry, the handset industry or the features of the mobiles, we tend to use mobiles ranging from absolute price of let's say something like a 5,000 rupees, which is a basic mobile today, and that may range up to 65,000 and 1 lakh of rupees as well. So what kind of features are we really using? I'm just using mobile as an example. So is the expense justified on the mobile or rather on whichever expenses that we are doing also needs to be checked. As you rightly said, the expenses done on the shelter, that is a home or a home loan, and so on and so forth, is justified, absolutely. But on the other side, are we really buying a home that can be called as a house, or are we just buying a home to show others? Particularly, there may be a lot of things that may come in our standard of living, the incomes that we are generating, and on the other side. So, in Marathi, as I usually propagate financial literacy, we always say "अंथरूण पाहून पाय पसरावे." That is nothing else but you need to check what kind of incomes are you generating, and on the basis of that, you would be spending. So, as Vishwa sir rightly said, millennials have a spending habit. I absolutely agree. I have so many of my cousins who are in that generation as well. But point is, once again, is it justified? Is the point which I would really like to bring to the notice.
Yeah, I would
Yeah.
like to add on to this point. Whether before going to house, I have done some interesting research. I want to showcase.
Yes, Vishwa. Yes, Vishwa.
So, if this, as you mentioned, smartphones range is between 5,000 to 65,000. So, if you see, because of this data revolution that happened, because of a lot of 4G companies came, our monthly bills have come down from, let's say, from 500-600 to 1,000 rupees what we used to have, and now that similar plans are available in 200 or 150 rupees also. So in that way, our monthly plans have gone down. But have we actually reduced our expenditure in telecommunication? I think no, because what happened then, people who were using feature phones of 5 to 6,000 rupees have upgraded their devices to 20,000 rupees devices. So in that way, what they are saving 500 rupees a month in their monthly bills, that 500 rupees into 12 months in a year, 6,000 rupees they added it to their device and they upgrade their devices. So that is something that we'll have to. It's an interesting piece at whether we are getting on low cost, but are we reducing our expenditures or we are just increasing in some other mode?
Yeah. Vishwa, I would like to bring the other dimension here. So we are discussing about expenses at this point of our discussion. See, actually, Indians are more conservative in terms of spending money. Okay, they are more conservative in terms of spending money until, if I believe before this debit card, credit cards, and all these came. Okay, so I can see the technology enabled us, the more and better access to our finances. Okay, but after the developments, okay, the technological developments, including internet banking, mobile banking, all these things. So then only I can see a more of attitude towards spending more than our income. So especially millennials like you. So we are not even we financial the experts in our literacy programs. We tell them first you need to consider for saving and then you look at your expenses. But the situation in India in the middle class is totally different today. We are actually spending more than our income. Okay, we have a credit cards, we have a debit cards. So how do you see this phenomenal change in the mindset because of this advancements in the modes of payment, the tools of the financial tools?
Exactly. So, yeah, as you mentioned earlier, when we were before digitization,
Mm.
people used to go to banks to withdraw checks or withdraw money from the banks. Then ATMs came. So, access to money has become easier. So, whenever you want, you have the access, you can go to the ATM, you can get the money. Now it is even easier. We have mobile wallets. Whenever you don't even need you can go cashless whenever you want. You can just get the you can use your money, which whatever is in your account, and even without money you can just add your credit card to the e-commerce site and you can do the shopping. So in that way, from non-digital to digital ATMs and then digital money and plastic money, in that way the access we have 24 plus 7 to the money which belongs to us, or which I would say which doesn't belong to us because it's a credit card. In that way, we this habit has grown a lot because of the access of the plastic money or electronic money.
Yeah. Professor Amok, I want to know your view on this also. See, by having a credit card and all these credit facilities, okay, the more access to the, better credit facility, made our middle class to spend more than their income.
Exactly.
Okay.
True.
So what is your, your suggestions and how they can manage this access to credit, the credit availability? Okay, so how they can manage? So what is your, the tips or views on
Uh,
this?
Sure. I come back to the same point. First of all, we should really check whether even going in for a credit card, is it really justified? Because the
Mm,
point is, somewhere credit cards will have a pros as well as cons. Uh, Automatically, sometimes what happens is we try to build on our dreams. With every person, every human being definitely is going on to do, but somewhere credit cards fuel our dreams. So, is it a really what do you say, a justified dream or not? So many of us, probably I'm from Mumbai, so many of us have a dream of buying a house in Mumbai, which definitely a loan may be possible. But once again, are you really justifying yourself when you're looking for a loan? Similarly, on the other side, when you buy mobiles, for example, today we have an EMI facility that is given on most of the consumer goods. So is it really justified that you're buying that consumer good, then be it a mobile, be it AC or maybe a refrigerator? Is it really justified or not? Is what we need to see. And on the basis of that, then we should be going on to utilize it. On the other side, there are also many aspects that we need to take care of, whether when you are going in for a loan, the amount of interest that you're going to pay on the loan, is it going to be in par or at par with the kind of expenses or with the kind of income that you are generating? A normal example I would like to introduce here is that usually in personal finance, what we should advise is that whenever you have any kind of a loan going on the other side, you should also have a mutual fund SIP going. So
mm,
automatically, what happens is the kind of interest that you are going to pay on the loan, and on the other side, the income or the returns that are generated on the mutual funds automatically would negate your interest or almost try to reduce it, and on the par of it. So, for example, you have a loan, a housing loan for that matter, at let's say a 10% interest rate going on, and let's say the period for that is, let's say, something like 10 years or 15 years, for example. So on the other side, we advise that you can also go in probably for a mutual fund SIP for the same period, so that over the period of whatever 5 years or 10 years or 15 years, on the contrary, what happens is the interest rate goes on decreasing. So on the interest on the housing loan, let's say you're paying 10%, but on the mutual fund SIPs, if you're generating a return of let's say 12%, you definitely gain 30%. So this is a
yeah,
simple
since
example that I
you,
give you how you can try to minimize on your expenses with regards to the interest on the credit that is available. So loan would be one example, it could be credit cards as well.
since you brought the mutual fund investment, I want to get clarity here. See, for a middle class Indian, okay, for a middle class Indian, what type of mutual fund investment is you would suggest? And not, I'm not trying to get the, the names of the mutual funds. I would like try to get the type of mutual fund, which will be the more apt one for the middle class Indian to go the mutual fund type. Which type of mutual fund they can go for investing?
See, basically, I just like to start with a basic introduction of mutual funds. So mutual funds are nothing else but an indirect exposure to the capital markets. So there are three main types of mutual funds that exist across the world. Particularly in India, we have three main types. The first one is an equity mutual fund, wherein whatever amounts that you're investing in the mutual fund schemes, whichever XYZ, that money is invested in the capital markets, particularly the equity markets, if it is the first category, which is equity mutual funds. On the other side, the second type that you may have is something like a debt mutual fund, wherein you invest the money in the debt mutual funds and the investments further would go down into bonds or debentures or commercial papers or certificate of deposits, particularly investments which would be comparatively less risky. And a third variety also exists, which is nothing else but a balanced or a hybrid mutual fund, where you would have a particular proportion of your money going into both the markets. That is, some proportion into equity and the remaining, the balance, will go into debt. So sometimes equity can be more than the debt markets, or on the other side, sometimes the debt market, that is the debt investment. So now going forward to your question, what kind of investments are suitable? The first thing that we need to know is that what kind of objectives the person has. So for example, if the objective of the person is liquidity, then liquidity portion of the fund should be checked. Most of the times, whenever Indian investors particularly are less patient, patience is a problem, particularly with the Indian mentality of investors. So whenever there is the market situation going downwards, we go into the panic mode and we try to sell. But please remember, just recently during COVID time, somewhere in March, the market tanked like anything. So almost 30% the markets were down. The people were in a panicky mode. But this is actually also a time to invest more, because then you can get more units, because at a lesser NAV and the same ongoing SIPs, you can have a higher number of units coming. So now the question is that what kind of investments or what kind of schemes should you go for? So for example, if you are a risk-prone investor, then you could go for equity mutual funds. On the other side, if you are a less risk investor, which is what we call as risk averse, so that category of investors can go for debt mutual funds. And on the contrary, if you want to take a flavor of both, you can go for balanced mutual funds or hybrid mutual funds, wherein you can have a proportion of equity as well as a proportion of debt. So this is particularly better for investors who do not want to take a very high amount of risk, and on the other side, also do not want to go absolutely risk averse. So these are the category of mutual funds, and according to the risk appetite, they can go for investments.
Yeah. Vishwa, always it is better, being an economist and being financial advisors and investors, we always suggest to, have a fund for crisis management. Okay. So, that is what we suggest. So now, we are in the pandemic crisis and many of the Indian families are struggling with managing their finances of their routine, regular livelihood, the expenses. So I would like to know from you how important it is to have some, your money, as our, the crisis management fund. Okay, so I would like to hear from the millennials, especially, you are the guy spending more than your income. So I would like to hear a few of your experience or few of your experience from your circle, and how did you manage this crisis when you have already have the mindset of spending more than your income?
True. So as Professor Amok said, so already there are, if in terms of investment, if you have invested somewhere money, then you should already had a kind of, I think Professor has dropped. This kind of understanding of the profile of the customer is very important. What type of investor I am, if whether I have the appetite of being in the market, or whether I have this kind of funds that even if whatever happens, I can continue to stay in the market, then I would suggest, if even in this pandemic, if the people have the funds, then as you mentioned, people will actually go for shopping for the equity. As we were discussing about the equity is investment basis, the profile of the customer. Even in pandemic, it is actually a discount shopping for equity investors. When the market went down, it was a shopping bonanza for them, because they were getting on discounts. But they should have the fund for that. As you mentioned, when to fight this kind of pandemic, the people should have, as again going back to the first comment of Professor Amok, first save and then expenditures. So exactly that mindset change is required for the going normal and going for this type of pandemic situation. And one more thing, as we were discussing about home loans versus different type of debts that people need to take or which is must. So in those cases also, we need to understand the appreciation assets or depreciative assets, whether we are taking debts for appreciative assets or depreciative assets. Investing in taking, as you mentioned, consumer goods, taking a loan for a 6 months EMI for a mobile phone of 65,000, which you cannot afford, that should be avoided. That is why just to avoid that, we'll set a mindset to fight this kind of pandemic. If someone has taken a 10 months EMI on this type of asset, it is not worthwhile. If someone has taken for appreciative assets like a home, which may be a need or an investment, which can still give you some returns, but expenditure in this kind of mobile or these kind of electronics that people are doing, which is in a way a sunk cost, because after that the resale value will not be there, it will depreciate. Even the cars, if people are not using cars on a daily basis to commute to their office or their normal work, I would suggest they should not go for it, because nowadays, just if you calculate all the EMIs, if they are purchasing on EMI, then the maintenance, then insurance, and then if they want a driven by a driver, then the complete cost of ownership will be higher than hiring an Ola or Uber. The when options are there. So in that way, the mindset change should be there, whether they are spending for need or spending for luxury or just spending of show off. I will use this term show off because of it aligns to the generation that we belong to. So in that way, we can just change the mindset and align it to our customer profiling or our investment profiling to fight these kind of situations, I would say.
Yeah. See, as we are discussing about a home, so for millions of Indians, having a home is a dream. Okay. So now there are two views and two opinions I can see in the market. It's a good time to buy a home. Or the other set of people are arguing it's not a good time to buy a home. Okay, for a middle class, and by considering the situation for the last 6 months, so what is your take, Professor Amok? Whether what is your suggestion for the middle class of this country, whether they can buy an investment property or they should save for their dream home? What is your suggestion? Whether you would suggest
I
to buy a investment property now or you suggest to save money for their dream home and they can buy it later. So what is your view on this?
I would go a bit backwards first of all. Looking at the COVID situation, first of all, many of the people in the employment opportunities in our country and across the world as well, definitely has come to problems. And till the time probably the vaccine comes out, probably this will be comparatively shaping the market. So first of all, I would go back and confirm with the respective people, do they have secure jobs? That's the first thing. Once, if they have a secure job, then the second thing comes in is that what kind of finances are they making? So do they have some put towards emergencies, as we were talking about some time back? So if they have an emergency fund in place, on the other side, all the other requirements for them are taken care of. So some basic requirements are like their day-to-day expenses. Second is what kind of kids' education they are probably going in for. Then probably something like leisure, which as of now for the COVID time, at least leisure is a bit outside our gambit because many of us are not going out typically towards leisure-related expenses or activities. And then comes the point of buying a house, which is particularly as an investment. So my view particularly here is rather than buying a house for investment at this particular point of time, I would rather suggest them not to go for investment, but rather than what they can do is they can stay in a rented property, or if it is an absolute need for them, which is once again I come back to the primary needs. So is the primary need, which is a shelter, is a requirement for them currently, then only they should go for it. Investment, according to me, as of now, should be a no, because then there may be many issues that coming, particularly in the real estate sector. During the COVID times, what we've seen across India is many laborers have gone back to their homes. So real estate industry as such also is facing a lot of problems. The funds coming in, going out, and so on. They have a big land bank there, but on the other side, the properties are not getting sold off. So there may be many issues that arising. Probably we need to have a separate panel discussion on real estate when we talk about all this. But point is, looking at that, once again, I come back to the point. Investment, I feel, should be staggered, not currently done. But on the other side, if it is a requirement, a necessity, a primary need of shelter, yes, they should go.
Yeah. Which was the second to homes. Our the next dream is to have a car. Okay, so having a car. See, in Indian society, car is more like a a product of pride.
Yeah.
In the middle class, they used to treat this having a car itself is a pride of the family. So that is how the Indian families used to treat that. So what I would like to bring here is or to have a discussion. So for which the people, okay, for the which people, for the what category of income people you would suggest the car, buying a car. For example, as we are discussing, car is not a productive, so it's a liability. Buying a car is a liability. So by considering the middle class of India, so I would like to hear from you, the experts. So for what level of income people you would suggest to go for buying a car on loan?
Yeah. So, as you were discussing for the last point, again, the change of mindset, and I would say this is actually happening. At least in the millennial and the young population, they are moving from ownership to rentals. So in that way, you will see a lot of Ola, Uber, and Zoom cars of the world are getting popular, and rather than going for ownership. So this is again a kind of positive side of millennials, I would say, for this scenario, is because for the cost of ownership is going down because they don't want to take the headache of maintaining a car, but they can just take a subscription model for on rent. So that is something is going to happen. So in this way, millennials are well prepared because their mindset is clear for that, and they are less likely to align ownership of the car with their status in the society, which was there 5-10 years back. But again, as Professor Amok said, similar to house, even house is which is an investment. We can consider as an investment. Still, once the people don't have, till the time people don't have in surplus funds to go into that, in this situation, they should be kept taking themselves away from this. If they have surplus fund plus the need is there, then probably they should go for it. But I would suggest again taking the side of the millennials in this situation, at least for this car ownership, they are well placed and they don't see ownership of the car as precious as the older generation.
Yeah. Professor Ramok, see, I used to give in my like series of lectures. The economy is moving towards economy called the gig economy, right? So it's not in future we are going to have more of a temporary laborers, freelance works rather than the regular, the permanent jobs. So the all the including India future is going to be the temporary jobs only, so there won't be any permanent jobs. Okay, so how we can see, especially for the millennials and the people those who born after 2000. Okay, so what is your suggestion to be prepared for the future of economy where there will be only more of temporary jobs, not the permanent jobs? So this is going to be the new normal, I know. Another 5-10 years, you can definitely see a large number of rate of difference in the permanent jobs versus the temporary jobs. So all the informal sector these days, okay, except the salaried class, except IT teaching and government jobs, okay, and some of the few private sectors. So all jobs are look like temporary jobs only. So including manufacturing, including some SME sectors, all the laborers are working under contracts, freelance, temporary only. So what is your suggestion to face this kind of future economic situation, a model of economy?
I feel that the basic point or the fundamental point here is we should have an absolute secure and a concrete financial plan in place. So whichever people, whichever kind of jobs they are doing, if they have a proper financial plan, then they can face any kind of situation. Yes, of course, there will be some ifs and buts, some problems that would arise, but a basic financial plan should probably take care of all this. So when I say financial plan, there are various aspects that they should be doing. First is, of course, we spoke about the emergency planning or the emergency fund that we should have in place for such situations that may arise, something like what we faced in COVID, wherein we had some kind of job losses, some people had salary cuts, and so on and so forth. On the other side, we also need to check whether we have finances in place with regards to risk. So now when I say risk, we should also be very clear about the thing that risk, everybody of us, all of us would definitely have risk. And this risk, usually what I would put it as is coming in 3 Ds. So the 3 Ds are nothing else but death, which is definitely certain for all of us. Then we have disease and we have disability. So these 3 risks should be taken care of, which is particularly through 2 main things, which is buying an apt life insurance plan, and on the other side also buying an apt health insurance cover, which is considered definitely in demand today in our financial services, particularly COVID-related expenses that are hospitalization. On the other side, they should also be planning for their investments, which is a well-secured investment that should be there. Where in some point, as I said, if they are risk-prone, you could move toward markets, share markets or capital markets, as we call it. On the other side, if you are risk-averse, you can move towards guaranteed products, something like a public provident fund or an ETF, which you already have. And on the other side, you should also be putting some amount, probably in a point of gold, where gold acts as an investment. It's not just a holding product. Particularly in India, many of us, particularly the older generations, even today, some of our generation or millennials, look at gold as an investment option. But I would like to definitely make it very clear, look at gold as investment and not a holded product. Many of us in the Indian culture look at gold with an emotional value. We always say that in Hindi we call it as Sri Dhan. Is nothing else but usually for times of emergencies, people or families try to sell their gold is the basic fundamental when they buy the gold. Emergency aayega, so I will sell the gold. But unfortunately, sorry, that doesn't happen because we have an emotional value attached. And so if you're looking at gold as an investment option, please remember not to look at it as an emotional value, but an investment product. An investment, when I say, it should have a buy as well as a sell. And unfortunately, in India, it is only buying and buying and buying and selling that happens. And which is what I usually would call as a holder. And going beyond that, most importantly for millennials, they should be planning for their retirement well in advance. When I say retirement, usually the concept comes in our mind is 60 years of age or 58 years of age, the traditional age of retirement. But unfortunately today, with the kind of standard of living or with the kind of dietary habits that millennials are having, or maybe most of us are having today, a pizza or a burger and so on and so on. With all these kind of dietary habits and the accompanying stress, particularly related to our jobs or with related to our professional life, there is definitely a point that we are not going to reach 58 or 60 years at the time of our retirement, but probably we may come out particularly very early. And that is the time when you should have a retirement fund in place. So all of these aspects are given a basic part of it. If they're taken care of, then I don't think there should be a problem in regards to any kind of situation, be it a contractual labor or a contractual employment that comes in, or on the side it could be a temporary employment and or a freelancing for that matter. It should not be a problem. But please remember, it should be across all the things properly planned, a financial plan in place. Then I think it should go well with regards to.
Yeah. Vishwa, you are from the Equitas, a small finance bank, and I hope you may have a better understanding about the credit opportunities available to the small companies and middle classes of this country. So I believe there are a lot of new lending opportunities are coming up in the market. Lot of fintechs are coming up and lots of payment banks are coming up. So the lending opportunities are more now. Okay, new lending opportunities are very more and easily accessible also. So how do you see after this COVID-19, so all these situation, the developments, see, not just because of the COVID-19, if you look at the this context for the last 1 or 2 years, there is a huge transformation is happening in the lending segment. So how do you see this digital transformation which is happening in the lending segment? How this is going to change the face of this lending segment of Indian market?
Okay, so yeah, exactly. As you mentioned, a lot of startups or fintechs are coming, which will make lending accessible to a lot of people, and even unbanked or untouched people, which sector was not touched by lending companies or banks. So that will be available, but exactly again, it's part of this uh, because of this COVID, a lot of things will have to be considered in a way, like personal loans may not be very well structured in this situation, because people are not having the job cuts are there, they will not have a great uh, worthiness may not be there that much. So, but a lot of other things, as Professor Amol was saying, gold as an investment opportunity. But I see as a personally, I would suggest gold loan will take a major, it will become a major hit in post-COVID situation, because people who have gold will play a role of their collateral in coming time. Those people who need a loan, gold loan is going to become a big hit because of that. So, and then the fintechs and the digital organizations who are coming up with those kind of proposition will make it accessible to the people, for 2 clicks and the loan is there. It will happen because people need money to fight this kind of situation where they have uncertainty. But again, the type of loans will vary. So the shift may happen from credit cards to personal loans to this kind of collateral loans that people have. This gold can become a collateral in that case. So that is one thing. And just want to add one point on Professor Amog's point. That when the jobs will change from permanent jobs to the contractual jobs, a lot of shift will happen to the ownership, as we were discussing in the last point. People will move from like what we call capex to opex economy. Now we are a cloud generation. We don't want everything on us. We want to rental things. So a lot of that thing will also start happening, and people will can just quickly move out of those kind of setup. So that will also happen when people will move into this kind of contractual setup and the pandemic kind of setup, where they don't have the assurity of their funds, incoming funds.
Yeah. Thank you, Ishwa. Professor Amuk, I would like to, go ahead with the specific, very specific questions hereafter. We have another 15 to 20 minutes to discuss. So I would like to have a, very specific questions now onwards. So I would like to know from you, what are the things actually, will decide the PF withdrawal? Okay, the government is suggesting to withdraw your, a portion of your PF and manage, and this kind of your crisis situation, all these things the government is suggesting under that, relief package. So, what is your suggestion? Whether we can go for taking our PF, or you suggest to go with borrow, or manage with some credit facility. So how do you see this, the availability of you're taking a part of your PF for managing these situations? So what is your suggestion and your take on this?
Usually, what I would probably say is that, first of all, the PF is some kind of a retirement for all of us. So, when you're looking at provident fund as a credit, you can say option, the first thing is that, how are you going to plan for the retirement? So, if you have a retirement fund in place, or you have some other alternative where you would have some money coming at the time of the retirement, then keep it probably using the provident fund information. Otherwise, then I would have to say that you would definitely have to go in for a loan, and you would have to go in, take the loan, and then buy whichever asset you're taking. So, retirement PF usually should go hand in hand. But if you have some other alternative which is in place, NPS is a very good option which the government has already launched, the new pension system or the scheme. So that option is already there. But on the other side, you should also look at the pros and cons of the invoice provident fund and the NPS. And most importantly, it is guaranteed. The PF option is guaranteed. NPS does not offer a guaranteed return. It's the most important aspect that we should look at. And then we should be also planning for our other finances, for incoming funds, particularly at the time of retirement. And if that is there, then yes, you can utilize the PF, go in without borrowing money or maybe going for a credit facility. But if not, then probably credit facility goes your other.
Yeah. See, after this COVID time, there are a lot of reverse migrations are happening. Okay. So urban to rural migration is happening, and a lot of NRIs are coming back to India. So in this case, what are the kind of the money management changes the reverse migrated people can do to manage their finances? For example, especially for NRIs. So a lot of NRIs are coming back. So what is the kind of the advice you give for managing their money when they return back to India? Because people are trying to settle now in India, they are coming up with some of their savings which they hard earned during their time in the abroad. So what is your kind of money management changes you would suggest for these NRIs and reverse migrated people?
First of all, you have to look at the employment opportunity that has been there for these people. So, once again, I come back to the original point that I put across: how secure is your job? Is the first absolute point that we all should be very clear about. So, once we know the security of the job, accordingly, then we need to plan for the finances. And once again, going back into the financial planning part of it, all the different aspects of financial planning have to be taken care of. Right, starting from the emergency planning, going towards risk, then going towards investment and the retirement plans. And once everything is done, then whatever surplus funds we may have, park it into some illiquid assets, such as probably current, we can call it as REITs.
Yeah, Vishwa, these days I think you are aware the information is new oil, the data is new oil, and all of us are filled with a lot of information. Huge amount of information is available these days in the market. By having that information, okay, so we are in a better situation to take informed decisions. Okay, so by having this huge volume of information, how do you see this? Will it how it will impact our financial decision? Especially how it will inform the financial decision of the middle class. So this is where Amog is also contributing by spreading the financial literacy, because information is more, but all people in this country are not equally access to the information, that financial information. So how do you see the availability of more information, and there is a inequality in in accessing the financial literacy? So how do you see this, Vishwa? So later, Amok, you also can share your views after
Yes.
Vishwa.
Yes. Yeah, so I would like to take the opportunity to discuss about the role of data and data science and AI ML can play here. And if we,
Yeah.
I think we all are seeing that nowadays account aggregators and the personal finance managers, like these type of uh, applications are available these days. So people can just at one click, they can understand which are the areas they are spending a lot, what are their spending pattern. So that I'm talking about more self-service or self-driven people who already have some level of tech understanding. So maybe there it will be easy, or maybe a phase one will be for these guys. So they can understand what is their spending pattern, and then they can understand what is the pattern that they can avoid. As we were, the whole gist of our discussion for last 45 minutes was to avoid unnecessary expenditures will be the key to fight these kind of situations. So these are the data is going to help a lot in that way. So we'll get a holistic picture of where we are spending, what is the nature of the spend, what are the type of brands we are spending, what is the where we can reduce our expenditure for these kind of this tech generation. At the other end, there will be a lot of assisted role we'll have to play as maybe Professor Amok will add value there. There we are saying financial literacy for those sector where they don't have. There, the financial players will have to play the role, that to tell them about their goals. I would, this is basically not goal, but goal based savings instruments to these guys. What type of whatever profile the customer has. If someone is earning 500 rupees per day, this unstructured economy, and then they need to understand what is the requirement for the insurance, what is the requirement for the funds for their disease or something, some calamity happens. So what are the different buckets they need to decide, and then they can start putting. So data has a role to play everywhere. This side, I will see more of luxury to avoid unnecessary expenditure, but that side, goal-based saving instruments are going to play a lot of a bigger role to educate people in financial literacy.
Professor Amok, your views on this?
I feel that the financial literacy is definitely the need of the day, and as Vishwa sir rightly said, we should have the various sections of the society covered under that. A simple point I can give you, a simple example is Vishwa was just talking about insurance, life insurance for the matter. So many of us in India still believe that life insurance is not a policy, or rather a risk policy. It is an investment product. But unfortunately, I would really like to put it that it's not that. In India, the three major policies that are being sold are the endowment policy, the money back policy, and the term policy. Out of which, if you really see, we always try to compare the Indian markets with the other developed countries or emerging markets as we are a part of. But unfortunately, in India, it's still an investment product with regards to a life insurance. But sadly, it shouldn't be so. Slowly and gradually, our mentality, particularly the millennials now, have to start changing the mentality and look at insurance, for an example, we are taking towards a term insurance plan, which is a pure risk policy. And on the other side, then if you have your investment products in place, then you definitely would not look at insurance as an investment product, but rather you would look at a risk policy. It's not that it's not an investment, it is a part of the investment ambit, but returns wise, if you really see, which is a major part of investments, you do not get anything as such if you compare it with the inflation. And actually, sometimes even may go into the negative point. And it's better to look at insurance as a term policy rather than looking at endowment or a money back. And typically, in the developed countries, you don't have something called as a money back policy. It's just an endowment policy. So I think it's really a high time that we change our mentality, change our mindset, and start planning properly, and so that we can achieve all the success.
Yeah. Professor Amok, recently the government of India revised this, the income tax. Okay, there is a standard slab and there is a slab with the deductions, and there is a standard slab without any deductions. Okay, for whom you would suggest that the standard interest rate slab? For what segment of people you would suggest to go with, income tax with deductions? So if you clear, because most of the people, even salaried, classes like us, get confused whether to opt for a standard deduction or to go with, your tax slab with a few deductions. So what is your, guideline? Probably the people, those who are listening to this, will get an idea which, the income tax, slab they can select.
One important thing that we need to think about here is that what kind of exemptions are all of us claiming. So it would go in an individual specific manner. So what are the different exemptions? Generally, a normal Indian citizen would look at exemptions from something like ATC or ATD or ATCC, which is for NPS and so on and so forth. And plus that, you even have a standard deduction comes under Section 61. So a standard deduction of 50,000 is already provided by the government. But unfortunately, one thing that all of us need to think about is if you are going to take the exemptions, which is particularly ATC, ATD, and the standard deduction and others particularly, then it is only now applicable or available in the old tax regime. But unfortunately, if you want to go for the lower income tax slabs, which is a part of the new tax regime, then you would not be allowed to take any kind of standard deductions or any kind of exemptions for that matter. Only NPS, the provision that is there, will be provided, and all the other exemptions will go on. So going back to the question, people who want to take the benefit of the exemptions definitely would have a choice, and they would have to go for, it's better that they go for a older tax regime, wherein the people who are not taking the exemptions or who don't want to go in and take the benefit of the exemptions, they can go for the new tax regime.
Yeah. Vishwa, I think you may familiar with a lot of these online tools that app-based tools for investments. Okay, these days personal finance investments as well as stock market, even stock market trading has become quite easy these days. If you look at 20 years back, the stock market investments and trading was not this much easy. So
Yeah.
today we have enormous transformation in this particular online segment. So I would like to know from you. So what are the the four or five top app-based investment personal finance investment tools you would suggest to the audience?
Can't name here what other tool names like we cannot take, but otherwise,
Maybe
uh,
kind of features. Okay, maybe kind of
yeah,
the app which may have this set of features. Maybe go to you like that if you are
exactly.
not.
As we were discussing, some apps are available which can track our expenses, our inflows and outflows. So those apps are available. And people can search personal finance manager or account aggregator applications, and they can find they can, if they have 5 account, 10 accounts, they can get aggregated view of their accounts, their loans, whatever how much AMI they are giving, and what is their net worth. Even it can show the net worth also of the person, what is their monthly expenditure, which as we were discussing, which more they are expensing, their expenditures are high, and uh, on which brands they are spending a lot. All these things can be given, and then it gives a lot of tips also basis their profile. So basically they create the profile basis their spending pattern, their inflows of or their income inflows and all. Then they can create the profile of the customer, and that will be different for everyone. Maybe it's the two people who are earning same, but their fixed obligation to income ratio will be different. If someone is having their own let's say paternal house or their own house versus someone is on rented house, then the fixed obligation will increase. So the recommendations of the app will also differ by that, because it has analyzed that data, that every month this percentage of the income is going in that mode or in that area. So in that way, apps are there which can track everything. So people can search on and they can go by the ratings of the Google ratings, and they can it will give them authentic results. So these things are there, and that people can use to get a view, because people don't have the view how much the incoming inflows are there, how much the outflows are there. So that can actually help a lot in customer profiling, I would say. When the profile is done, like say we say diagnosis is done, then the cure is easy. So that is what people can choose.
Yeah, yeah. Professor Amuk, these days the use of technology is inevitable in almost all the segments. See, because of this advancements, there is the other side of these advancements too. There are a lot of cyber frauds are happening in the this when we move ahead with that. So, what is your suggestions to the people how they can safeguard? So, what are the kind of practices they can follow in their day to day? They are dealing with finances in the online to secure from these cyber frauds. Because you met lot of people, probably many people may also ask you, "Sir, I lost this much of money, and when I did this." So, how to address all these issues? Sir?
Uh, Most importantly, majority of the frauds that are happening are the COVID-based, the time, the lockdown time. Most of the frauds that are taking place, what I can see or what I've heard through many of the people, is that there were some links that were sent, the web links that were sent. People have clicked on that, and unfortunately, their money was siphoned off, and so on and so forth. Point is human greed. Human greed is very, very bad, particularly with regards to any kind of easy money that can be generated. And many of the times, majority of the frauds, particularly with regards to money, particularly which are happening, are where people are told that some money may be transferred to you, some income tax refund is going to be given to you, some bonus money on insurance policy is going to be given. So all these are aspects wherein human greed is tested. So a bait is sent, which is what we usually call as a phishing mail. So phishing, a bait is put in, and if you catch hold of that bait, only then you could be a part of that fraud. Unfortunately, one basic aspect that I would definitely want to tell you is that no human greed should be there in case. because that is the first point where the concept of frauds would slowly and gradually seep in. Second thing, and most of us, which all of us are aware, is never share your OTPs, your passwords. Continuously go on changing your passwords. Have a very strong password in place, and as far as possible, do not get into any illegal activities, or rather, I would put in as non-regulated or unregulated activities which are not permitted by the government or the state or the central government. So all these aspects, greed is the most important point. Keep it aside as far as possible. Don't get lured into any kind of things wherein some refund is going to come. Or there are even aspects that a fake website. Recently, what I have seen is a fake SBI branch was in place where the frauds were taking place. So,
Yeah.
State Bank of India, a fake branch in place is a very big aspect that you could think of as a fraud. So, all of these authenticity of that, authenticity of proposal or the refund or the bonus, whichever type of frauds that we get into, we should first check for the authenticity, keep the human greed aside, and have all our security protocols in place with regards to passwords, never sharing. I think that should more or less take care of me not getting into any kind of a situation.
Yeah, yeah. Vishwa, and I think you are also a entrepreneur for some time, and you always have that spirit of, the entrepreneurship. So, lot of people from the millennials are having a more of, the interest to try out something and, they experiment something in terms of coming up with new initiatives. So, I would like to hear from you. So, what would you suggest for this aspiring entrepreneurs? How the aspiring entrepreneurs can manage their personal finance and getting into their startup ventures? Because
Exactly. So,
many of my students and youngsters are very much interested in coming up with a startup and coming up with something new at different volumes and different levels. So, I like to know for the benefit of them. So, how they can manage their personal finance before they get into some ventures.
exactly. So as you mentioned, being millennial, people are more inclined towards these kind of opportunities because those opportunities are also there as compared to our previous generations. Yeah. So again, as the basic points that you were discussing, again, cut down on their unnecessary expenditure. So and not committing to any long-term financial obligation. If you just commit to a confidential obligation, as Professor Amok was saying, don't buy a house if you don't, if you are not in that condition or don't have a surplus for investment purpose, because once it is purchased, then it will become a liability where it will give you when you liquefy that money. But other than that, because if you want to start your own venture, you need liquid funds, and then you can't have a debt on you. So being debt free is the mantra for, I would say, for millennials to try out new things. If they had a debt, if they have a debt, their hands are tied. They will just continue with their 9 to 5 jobs, and the whole innovation or that whole creativity will be gone. So, and I think that is why we were seeing a lot of rental options are coming. That is actually aligning to the needs of this generation. That is more aligned towards taking these kind of risks. So, how people are moving from renting, as you were discussing, renting a house rather than purchasing, renting a car rather than purchasing, or taking the assisted mode of Ola and Uber kind of thing. So, people are moving into that area. And these are the mantras that people can avoid unnecessary expenditures and long-term commitments if they want to take this kind of risks.
Yeah, Professor Amuk, what I observed is after these technological developments in the banking and personal finance, women actually got more financial freedom than before. Okay, previously when we had only access to banks, only that if I'm not wrong, that is you're purely male dominated. Okay, only the males used to access the financial the institutions and instruments. So these developments, debit card, credit cards, when digital transformation happened and when we got into the mobile banking, okay, so I believe the woman, the female, got more financial freedom. That is what my observation. So I hope you also met, for different people, women also. So how do you see, what is your view on this? How do you see this, the more of financial freedom for women after these developments?
Definitely, what you say is that women empowerment has definitely taken place,
How
and
does that
most of
improvise? How does that improvises the personal finance management of the family? Okay, so when women get the more financial freedom, women see whether we agree or not in the Indian system. Almost you two may also agree. Women are the ruler in the home. Okay, they are the rulers. Okay, so when you come to the home and they will rule the home, and the finances are with them. Okay, when they get more financial freedom, how does that will help to manage the personal finances of the family, and how does that help the family to attain the family's goals, financial goals?
uh, that's really a nice thought, and I think our trust, charitable trust, and the trustee and the treasurer of the Deeparchan Charitable Trust, our trust is working a lot on creating financial literacy. So we have targeted particularly, we do programs for the police, we do programs for the nurses. Now, typically what we usually do is we would target the people who are already financially literate. So everybody goes and talks to doctors, everybody goes and talks to the high ranking people, but on the other side, nobody talks to their families. So similarly, what we did was police, Maharashtra police, where we do our programs, we even started targeting and talking to their families. Because police on one side are doing the duties, they're doing the duty for the respective state or the center or the country, but on the other side, their finances are being managed by the banks. And most of them in Maharashtra police, particularly what we see, because we've done a lot of programs for them, they are housewives. So financial literacy and creation of literacy for them with regards to finance or managing the finances is really the need of the hour, and they have done that slowly and gradually. They have started picking things up, and slowly and gradually we are also trying, we are doing our own bit, trying to create this awareness. Similarly, on the other side, as I said, we are also doing these kind of programs or literacy, financial literacy programs for nurses. Once again, everybody goes to doctors, everybody talks to them, it's you can say financial planning for them, plans for them, but nobody is actually doing their bit for nurses. So we, along with others, many others, were doing that, of course. But we are also doing on our own side. We are going to these people, we are going to the nurses, and we are trying to create awareness for them. So on our trust behalf, we can definitely say that at least we are targeting two of the aspects here. One particularly the nurses around Mumbai and Maharashtra, and the other side we are targeting the families of the Maharashtra. So definitely, I would like to take the help of this platform and all the viewers who are watching and the other people who will watch later. Definitely, I would like to say that we are doing our own bit. I hold my hands and say that you also try to do your own bit in creating this awareness. And many hands are definitely required for this activity. You can take our help if required. Definitely, we are always there, and we
Sure.
can take it forward.
Yeah. Vishwa, these days, millennials again, okay, so, I can see the people's, the attitude towards investing more in themselves, okay, invest in yourself. It's a kind of a new mantra, investing in yourself in the sense, investing in their career development, investing in expanding their exposure, expanding their knowledge base, okay. So, I want to know how important it is for this generation to allocate some portion of their income for investing in themselves, for the knowledge expansion, for the career development, for learning something new. How important it is to allocate some portion of your money for being upskilled and reskilled these days. So I would like to hear from you. I think you are one of the right person to give opinion on this. Yes, please.
Yes, exactly. Very, very nice thought. And actually, people who are thinking are in right direction, and who are not thinking, it can be, this question can be an eye opener for them, because a lot of initiatives are going on for Skill India, to skill enhancement of the people. Like, our population should be able to grab the opportunities. As we people are saying, a lot of opportunities are coming to India from the other countries, which, because after COVID. So if we are skilled, then only we can grab those opportunities. And so in that case, this is going to be the normal, there is no option for that. These people should have do some portion of their income towards the skill enhancement program. And people are doing, we are seeing that young people are putting some part of their incomes for their certifications. And because of digital transformation, out of digital certifications are available, these type of blended learnings are available. So people are doing that, and it will we will see a high intake in the coming time.
Yeah, thank you. Almost we are running out of time. It's 8:10 now, so we had enough of discussion. We can have even 2 hours, 3 hours lengthy discussions on this, because it's a very wide, and people may have, even I myself have a lot of your questions to ask. And of course, you also own mind to share your experiences. But definitely, we'll be connected, and we will take your contacts to the audiences. So if there is any need, probably they will reach you. So before we conclude, I would like to take one or two questions from the audience. So there is one guy by Chit. Okay, it's a response to Vishwa. So it is good to hear that Equitas gives their client a good rate of interest in their fixed deposits. Kindly, if you share your insights about investing in different investment structures and instruments other than fixed deposits, RDs, and post office scheme to fight the inflation rate, which is approximately 7%. Vishwa.
Yeah. So yeah, thanks for the question, Jeet. Again, here on this platform, I will be sharing my views as my personal views. So, but as you mentioned, a lot of banks are coming with high interest rates and different type of schemes. So again, it depends on your risk appetite. So the instrument that you are going to choose, and that is going to help you, is depends on your risk appetite. If FDs and RDs are risk free, if you are investing that money, you will get assured return. So because of that, people are more inclined towards those type of instruments. But yeah, as if you have gone through our discussion, we were saying, let's create a blend of the investments. You can put some money in risk-free investment. Some money, as Professor Amok said, go for bonds where you can get more than 7%. Then if you have more risk appetite, you can have some portion of your income towards equity, where it can go to negative to the positive, to some 10% or 20% also you can earn. So as exactly the term that Professor Amok started with, the mutual funds, so which is actually a blended option of different investment instruments. So there are multiple available options are there. You can choose based on your risk appetite and how much risk you want to take. What is the minimum amount of return that you want? You can create your own composition of investment instruments.
Yeah, yeah. The next question is from one Mr. Prashant. Students are about to graduate. What advice can they take as they move into a workforce? What should they do if they are worried about loans they have to pay? He means the education loans they have to pay after they have college, when they might have not able to find work. Amok, you would like to respond to this?
I think most importantly, first of all, what kind of education are they taking is very important. We, as a part of the trust, we are also working on employability skills. So the skills report in India, particularly the latest one that we've just gone through, says that a lot of people in India are unemployable. So in spite of going to the theoretical aspect of the academics of the career or the college, many of them still do not have, they have theoretical skills, but not unfortunately the practical skills, most of them. So I feel that employability also needs to be taken care of. And on the other side, once they are employable, so they should also slowly and gradually start blending their theoretical life or the academic life with extra co-curricular activities to develop their personality. As you were rightly saying sometime back, a particular proportion of their incomes have to go in towards having some kind of personality development. Many of the students today have stage fright. They should probably go in for personality development towards. Many of them probably not able to talk in fluent English language as well. So English speaking also is a big problem that we face in the rural parts, particularly of India. So that also needs to be taken care of. And slowly and gradually, as they then move towards their postgraduate life and later on towards their jobs, that's the time when they would actually go in for an education loan. Here also, I would definitely like to put forward that many of our students are going abroad, particularly for their further study, wherein a huge amount of liability or rather a loan is taken, an education loan is taken, and then the kind of expenses that are incurred towards that, and plus the standard of living in the respective country, or even for that matter in big cities of India, like Mumbai for that matter. So there the expenses are high. So first of all, what kind of employability is being created with regards to qualities that a student has in himself or herself. Second is the kind of course that they are doing, and then what kind of job can they get post that course is what needs to be thought about, and only then the loan needs to be taken. And once again, putting forward the point is that loan to be taken justified, then only you go for that course, and then ultimately, slowly and gradually, as you do a good course, you have the qualities in you, you will definitely get a good job. And then slowly and gradually, then you can start paying the loan. But if yourself, you don't have the capacity, you don't have the qualities, then those qualities need to be developed. And that's exactly what I'm trying to put forward. Slowly and gradually develop yourself, spend on yourself with regards to developing your personality, developing your academic life, your co-curricular life, and on the other side, whatever extra skills that you can have, particularly for your career or for your CV.
Yeah, thank you. Wonderful. We had really a wonderful discussion today for more than an hour today. So I am very much thankful to both of you. We had we try to cover many dimensions of managing the personal finances. So there are a lot of things to be discussed. There are a lot of specific doubts and clarifications maybe there. But being a panel discussion, I try to bring a lot of insights about how to manage the personal finance rather than to a very specific questions. Of course, we covered few of the technical specific questions too. So on behalf of Professor GSK Social Laboratory, so it's our hearty thanks to Vishwa and Amok. Thanks for coming and be with us. And moving together, we will try to do our best to this community by spreading this financial literacy awareness. Thank you very much.
Thank you. My pleasure.